that time. It is that time to tell you, thank God it's Friday, right? If you're a person who works for the weekend, TGIF to you. It is also the 28th of February, 2025, meaning it's the end of the month on the markets, and that includes crypto. Because even though it's Friday, well, the 28th of February this year, that's the last day of the month, making this once again the shortest month of the year. My goodness, when will this end? Will it ever be the case that February is the longest month of the year? Huh? And before you laugh, remember, lengths of months and even months themselves kind of come and go over time, right? There did not used to be a month of August or a month of July. Those were added by two distinct, separate Roman emperors, right, who thought of themselves as living gods. And so they added the months. Julius out of the month of July, Augustus out of the month of August. Technically, Julius was, well, anyway. So, yes, so months come and go. And also in the Kingdom of Nepal, in case you did not know this, the King of Nepal has the right and privilege to change the calendar as he sees fit at any point during his reign. So, like, if they're having a particularly good season or year in the, I don't know, grain harvest or whatever, and if the harvest is usually in the month of, I don't know, whenever it is, April, let's just say, or May, right? You could be like, yeah, we had a really good May this year. We're just going to extend the month of May for another 30 days or 60 days and just be like, yeah, we're still in May. And just completely skip over the other months or make them like, a day each or whatever. Like, must be kind of nice to have that kind of, and before you think, oh, that must never happen, this is the ceremonial thing. No, it actually happens. In fact, it happened not long ago, like within the last couple decades, within the last decade, in fact, it happened that he skipped a month. Or if they have something terrible happen, they can also like end the month on that day and just move immediately to a new month or whatever, for whatever reason, spirits or something. I don't know. But the point of all this is to get back to crypto and tell you some fun things about the crypto market. Fun as in for traders, yeah. So what's happening? Well, you might have noticed that Bitcoin and a bunch of altcoins took a bit further of a dip yesterday and dropped very nicely in price towards the end of the day yesterday. And that just gave traders more of a discount, right? Well, anybody who was long, well, you should have closed your long position. And I hope you didn't take the move to the downside in a long position. But, of course, we know that many people did. And lots of people got wrecked because that's how trading goes. See, that's why it's important to trade low time frames and low or no leverage. Because let's say you were in a long position and you're trading low time frame, right? And you were not over leveraged. And you got distracted and you forgot to close your trade because something terrible happened in the real world where you are. I don't know what, like, a brick fell on the floor from your shelf and you had to go fix it. I don't know what. Inventing nonsense. And you got distracted. And for whatever reason, you didn't close your trade. And then you come back an hour and a half later and you notice, wow, that price really went down a lot and it went against me a lot. But it only went like 2, 3, 4%. Okay. If you're not over leveraged, if you're not leveraged at all, okay, it's 2, 3, 4%. It's not fun. But okay, you lost 2, 3, 4%. But if you were over leveraged, if you had a 10x position or something crazy, which a lot of people do, you lost 20, 30, 40% in that same scenario, right? And if you leverage more than that, 30%, you're wrecked. I mean, 30x, you're wrecked. Or even 25x, you'd be wrecked. You know? And again, you get wrecked before it hits 100% loss, right? Because then trading fees and the liquidation fees, all this stuff adds up. So you can get like 75%, 80% of the way to 100% loss, and you're already at 100% loss in actuality. Which is why you do not leave your trading station with trades open. I don't care if you have to like open the door for 5 seconds and come back. You don't leave your trading station at all. Like, you eyes on your screen, right? There's like no reason whatsoever to do otherwise. Now, here's something else that's fun, okay? Let's say you start out with a $1,000 trading account, okay? Just as an example. And you understand that over the course of a year, you're not going to trade every single day, okay? But let's say you take that $1,000 and you average, or no, just for the purpose of the example, because you won't actually do this, it's not really possible. You get 1% per day that you stack up. 1%. Just 1% per day, okay? Sounds easy, right? It's not so easy. But if you were to rack and stack 1% per day of your stack, obviously that compounds over time, and every day it's a little bit more. So 1,000 today will be 1,010 tomorrow, and so on, right? And the next day will be 1,021, and so on and so forth. So if you were to do that after 365 days of trading, which is going to probably take you more than a year because you got weekends and holidays and other situations, but 365 days of trading will net you something like $234,000, okay? Not bad. And sorry, 23, yeah, 23,000 bucks. 234 is if you start with a 10,000 stack. Start with 1,000 stack is $23.4 thousand. After 999 days of trading, it'll rack up to something like 20 something million dollars. Okay. If you were to start your stack at 10,000, which is not out completely unusual, you know, it's more than the average. The average is around 5K, but 10,000, it would be 10 times that. So talking, you know, more than $200 million after 999 days. And again, after the end of the first year, more than $234,000 just from 1% a day, trading 365 days, growing 1% a day from a $10,000 stack that you start with. Now, of course, there are going to be days when you might lose a little if you don't do things right. If you do something bad, you mess up, whatever, you misread the information, you did something stupid, you tried to take leverage, you tried to outperform your 1% goal for no reason. You know, you hit your 1% goal, that's it. You go on with your life. Come back the next day refreshed. Take another 1%, go. And you might be like, oh, that's too easy. Really? Why is that too easy? Do that every day for a year. Go ahead, I dare you. Start with $1,000. Make it grow every single day, 1%. Just 1%. That's all you got to do, right? That's not hard, right? Well, if you know how to read the VEPs and you know how to take the appropriate action, in theory, shouldn't be that hard. Question is it hard? No? Okay. But because if it's not hard, then yeah, then you don't have to worry about it. Okay. Okay. Yeah. Woodpecker. Walking around, there's a bunch of woodpeckers around here. They're funny. Amazing little birds. Want to see one? These woodpeckers. There you go. There's one. You see him? Do you see the woodpecker? There he is. He goes running along. The woodpecker. That's Woody. He's got friends around here too. Want to see him fly? He got these little red feathers on his head, just like Woody. Hey, Woody. It's okay, buddy. All right. Woody the woodpecker. Wow, look at that plumage. Look at that royal plumage. Kidding, but it is nice plumage. Oh, there's another one. There's two of them there. See that? See the other one? You see them both? Yeah. All right, woodpeckers. I know this Bitcoin video has suddenly turned into, where's Woody? There they are, hanging out together. Hey, guys. Right there, next to each other. So glorious. These two little woodpeckers. All right, guys. Have a lovely day. Woodpecking around. All right. Anyway, back to the markets. So, what is interesting that happened on Bitcoin? Well, you may have noticed that the Bitcoin price did dump, as I mentioned. And so did Solana, and so did a bunch of coins. Oh, but we're going into the bear market. I thought you said yesterday we're not going into the bear market. No, I said that all the YouTube Jimmies are stuck on this big picture narrative, which is a bunch of BS, which you can't use as a low time frame trader. How does it help to think yesterday that Ethereum is going to hit $1,000 over the course of the next months or years? How does it help? That doesn't help you yesterday. Does it help you yesterday? No. Right? What if yesterday the VEPs had shown you that it was actually going to go up for the day? So that information that we're in a bear market now is complete and utter nonsense. By the way, again, there is no such thing as a bear market or a bull market. There's buy pressure and there's sell pressure on any given day. That's it. If you just happen to have, and on any given moment in time frame, right? That's all there is buy pressure and sell pressure. There's either more people buying now or more people selling now. That's all there is. So if you want to say bear market or bull market, please understand you're using simplifications, gross oversimplifications and generalizations but basically what are extended periods of buying and selling pressure. That's it. Extended buy pressure periods, extended sell pressure periods. That's all these supposed bull markets and bear markets are. Nothing else. So, yesterday happened to be a day when a lot of assets fell, but not every asset fell. Some assets went up, right? Now, how is this useful to you as a trader? Well, you know that it did what? It distributed. A lot of assets that dropped distributed. They were in distribution, like on the daily candle, right? Look at Bitcoin. It's already distributed very nicely past the third standard deviation bar or band of the 1110 RMLR. It did that both on Tuesday and Wednesday. Yesterday, it actually did not hit the third standard deviation band to the downside of the RMLR. Came close, but didn't hit it. And today, so far, it has not hit there. And if it does hit that one today, it will very likely also hit the third standard deviation band to the downside of the 3012 RMLR, which actually, it would be really nice if it did. If you're trading, if you want to keep things simple and easy, I'll tell you why. You should know this already, but if you know that the bands have been hit, right, and then it doesn't hit it for a couple of days in a row, a couple of candles in a row specifically, because it's on any time frame, then what's going to happen after is you're going to have a very high probability that the asset is in mean reversion, right, to that RMLR specifically. So we know if the asset doesn't hit today again, then starting tomorrow, March 1st, Saturday, right, Biddy will be most probably in mean reversion to the 1110 RMLR. Well, now, before you can sing and dance and say, well, that's great, fantastic, let's go. Yes, currently the 1110 RMLR is above where the asset is. So if it were to mean revert swiftly, yes, it would be a move to the upside. But if it doesn't make the move swiftly, if it kind of does it very slowly by going sideways, well, I can run into it in another week or two. You know, within the next within the next week, maybe a bit more. It could go kind of sideways and maybe start to droop a little or even go up. Doesn't matter. That could happen over the course of the next week, giving you a nice sideways week ahead. Or it could continue its downward trajectory just at a slower pace than the RMLR's slope. So it could run into it that way. And that could take more than a week. That could take 2, 3, 4 weeks. That could take a month. Who knows? Take a long time. And same thing with the 3012 RMLR. If it happens to hit the third band to the downside of that and then begins to give you a confirmed mean reversion in progress. Same thing, right? So again, that's why when you're looking for mean reversions, you got to remember they can happen in the same direction that the asset's already been moving, or they can happen sideways, or they can happen in reversal to the direction that it was moving before. Right? There's no fixed, it must go the opposite way just because it's a mean reversion. No. You can have mean reversion continuing. In fact, we had one not long ago on 4 hour and on a daily also. Like, happens not a long time ago. Happens quite regularly that you get mean reversions in continuance, right? In fact, on very low time frame or on low time frames, like 15 minutes and lower, you get that a lot actually, right? Like it'll pump to the upside and then it'll be in mean reversion, but it won't just drop right back down. In fact, it'll just keep going a little bit up, but slower and slower, and then kind of, peak out a little bit and maybe just go sideways or continue up into it, but at a slower pace than, right? Or it'll droop a tiny little bit, but it'll be above where it hit that third band. That happens a lot. Now, how is that useful? Well, it's very useful. Because if you're in a long, for example, when it makes a move like that to the upside, you know that if it hits the third band, first of all, that's a good take profit area. But if you're not going to take profit right there, you're going to wait it out and see if it's going to keep hitting, right, again, or start to slope towards the upside, but slope less aggressively and eventually mean revert. You know that after it doesn't hit that third band to the upside again a couple times, then it is most likely going to hit that RMLR wherever it will be before it hits that third band to the upside, right? Which makes that third band an area where you can definitely take profit before it hits it again. And you can also set your sights to a new trade targeting the RMLR, whichever direction it's likely to go to hit it, right? Because it's most likely going to hit that actual RMLR before it hits that third band again. That is why it is useful. That's why they're very good. It's a very good set of guideposts, right? We know the probabilities and we know the distributions. So highly advise you do that if you're trading yield RMLRs, which if you're using the VAPs, there's no reason not to. All right. Okay, that's it for now. Happy trading.